Welcome back, Chart Addicts, to the Expert Trader podcast. This is another episode. We have a very, very special guest. We've been looking forward to this for many weeks. We got Uncle Ted in the house. Ted, do you want to introduce yourself to the traders at home?
Hi, everybody. Yeah, my name is Ted. I guess the Uncle Ted is my Instagram IG handle. I did it because my brother's got 3 daughters at home, so I was an uncle at that point. So I just thought it stuck, and then as I started trading, people started calling me Uncle Ted, and I'm like, okay, I guess I'm Uncle Ted now. But yeah, I've been trading for about 5 years now. I started when I was about 33, 34 years old. I was working full-time in institutions. I did multiple jobs in those institutions. Started off in asset management, moved over to compliance. I did US compliance and Canadian compliance. I had my Series 6, 7, 24, and 26 licenses from the SEC. So I was able to do both sides. And then towards my end of my career, I moved over into investment marketing, just in terms of having the experience on the compliance side. I was able then to help our investment marketers build out better, I guess, quality work in terms of portfolio, our ETF platforms, things of that nature, our mutual funds. So I was able to help there and basically make sure everything was in compliance when it came to releasing it to the general public or investors in that respect. So yeah, it's been a varied career. Yeah, I think, I did in university, I did finance and law. I was more of a numbers person than I was anything else. So it seemed to make sense. Really just started to take up trading because my job wasn't really fulfilling. I was earning good money, but I felt I could do so much more. And it got to a point where it's like, I needed to make a change. And that change came in the form of, going into the charts, playing poker for the last 20 years as well. Since I was like 18, 19 years old, you start to recognize patterns, you start to recognize ideas. And I started to see the charts in the same way, where it was, you're at home, you're online, you don't have to leave your house. But more importantly, like, you started to see patterns in the market. And then it basically came down to, how do you exploit those patterns? And then asking the question, why? So, I mean, it's been a journey. I can't lie. I mean, if you'd asked me 5, 6 years ago if I'd be sitting here doing something like this, I would have told you you're crazy. I've always wanted to be independent in that sense. I've always asked questions. I've always tried to push the envelope, because I think as individuals or as humans, we should always be trying to be performing at our optimal level. I think a lot of times people get pushed in a direction or, as a job, and you have the abilities and you have the skill sets, but you're not able to fully use those skill sets in your current role. I remember a lot of times in corporate, I was told no, or I was told we don't have the budget for this, or, we shouldn't be doing that. And it was more so, they don't see your vision. And it's not that you're wrong or you don't understand what's going on in there. It's just a lot of people protect their own jobs. Yep. They protect themselves. I mean, you work in corporate America, or, anywhere in corporate, your boss says they're looking out for you. And to a degree they are. I mean, don't get me wrong. I had a couple of good bosses. I had a couple of crappy bosses. But I mean, what ends up happening is when push comes to shove, they got to put food on their plate at home. They'll sell you to the highest bidder. Like, they're not going to protect you when it comes to job cuts or, who takes the blame. They're going to put you out to hang first, because they're protecting themselves. And that's just human nature. And, as an employee, you have to understand that. And the biggest thing that I've learned in my career, like spanning, I guess, since I was 23 all the way till now, really working in the real world, working with other individuals, is, don't take things personally, but also learn how to exploit those opportunities. If you see that someone's going to try and exploit you or throw you under the bus, like, prep yourself accordingly. Like, it's a game of Survivor every day of your life. You have to be able to adapt. You can't get mad at that person for playing the game better than you. You have to make sure that you see what they did and make sure next time it doesn't happen to you.
For sure. And I want to touch back on a lot of the stuff you said, especially a lot of the poker history that you have, kind of how that translated back into your trading. But walk us through the timeline of how long you've been trading and what year you actually started. So you mentioned 5 years in.
Yeah.
What year did you get started, and how did you get started into Forex trading?
Yeah, so started about 2015, dabbling in it a bit, and it sort of ties into the poker, the online poker. I had a lot of friends in university and still to this day that played online poker. And it was funny because, you know, you look at the mass amounts of money that these guys have won sitting like in their homes or in their basements or in their bedrooms. And I was always in awe of that because I enjoyed poker from the aspect of the strategy standpoint and the idea of if you make the correct decisions the majority of times, you will win the majority of times. And also, if you maintain proper bankroll management and proper discipline, you'll always be able to stay in the game. And I've watched my friends do that. I watched my friends grind from like $2 tournaments, $5 tournaments, all the way up to $10,000 buy-ins, $25,000 buy-ins. I mean, now even $100,000 buy-ins. I've watched them do that. And I always look back and I said, man, I wish I could have done that because I consider myself a decent poker player, but I never put in the time. So when I came to trading 5 years ago, it was my niche. Not I guess, because it's like, okay, well, I was in finance. I know a lot about finance. I know a lot about the markets. I never really traded the markets when I was at my job. I was always involved in it. Like I didn't make decisions, but I was always doing compliance. I was always doing testing, risk analysis, things of that nature. And now it's like, why not give it a shot myself? And then it was, okay, where do I go? How do I learn? I ran into a few people that, you know, weren't the best of characters. You know, me being naive, I've always looked at, you know, someone like my community was very tight when I was younger, like my poker community. Like if someone needed help, you asked for it, they give you their honest answers. Like they weren't looking to go after you. So when I started back 5 years ago, I was just trying to gather information. I was talking to people and I was talking to younger people. And this is the mistake that people make from an older standpoint, is they discount the younger generation, but the younger generation have their ear on the pulse, like they're right in it. So I spoke to a lot of people that were younger than me, and I'm like, okay, what are they doing? How are they doing it? And then how could I apply that information? And, you know, a few stumbles, you know, a few things that I regret that I've had to deal with personally and, you know, throughout social media. And I've explained myself a couple of times, won't go into that. But, you know, I realized, okay, here are the basics, you know, in terms of the foundation. And it's like, okay, the biggest thing I started to do was, you know, I grabbed a few books. I didn't read books. And that's the biggest thing that I think people have to get out of trading is because it's individual. You're looking to solve gaps in your learning. People always ask me, they'll say, well, how many books did you read when you started trading? I'm like, I read, I think, maybe 20, 30 books, but I didn't read them. What I did was I scoured the book to learn about a specific topic that was a gap in my learning. Because every book that you're going to pick up related to trading all tells you the same thing. And then that's where my learning curve started to accelerate, because I said to myself, I said, well, in poker, if everybody talks about the same thing, we all play the same way. So who wins? Nobody. Like if we play poker together heads up and I taught you how to play, you have to adapt somehow. You can't play the exact same way I play, because if you do, then we're at a stalemate. And it was the same thing with trading. I looked at that too, where it was like, okay, all these people wrote all these books and I skimmed through them and I took notes and I read what was being taught. And I looked, I'm like, okay, but they're all saying the same thing. If this was so easy, all I had to do was pick up, 5 or 10 books, read a book, and then start applying that information to the charts, I would be successful. It didn't make sense in my mind, right? Because when you think about it, right, like if trading was just reading a book, you give that to your grandmother the next day and say, hey, grandma, read this book. On Monday, start trading. Here's $1,000 and go nuts, right?
Right.
And that was the first thing I started to notice. And I think that's a gap that a lot of people don't look at when they start trading, is they don't realize that all the information is the same. We all start with the same information. And that's where, you get the rhetoric on social media, on the internet. It's like, well, every educator teaches the exact same stuff and blah, blah, blah. And it's true, because you need a base. You need to see what everybody else is doing first, and then you need to be able to adapt. And that was where the learning curve from years, I would say 2 to present, really took off. because it was, you sit back and you read all these books and you say to yourself, okay, this is what the general public are doing. This is how things are working. What's really happening? Where are we able to exploit the market? Because 90% of traders lose, right? We all know that. That's the standard, industry standard. They say 90% of traders lose. And I look back and I said, okay, well, that's similar to online poker, right? So if you go to online poker and you look at online poker, 90% of online poker players lose. And then you look at the list and you say, why do they lose? Poor preparation, bankroll management, playing above their limit, playing games they don't understand. So then
Are those overlapping with trading?
Yeah, because then now look at the trading aspect, right? Why do 90% of traders lose?
Yep.
Lack of education, lack of preparation. They over leverage their account. They overtrade, things of that nature. They're not finding optimal times to trade. They're not following their plan optimally. It's the same thing with poker. And I wrote an article for my groups. I wrote a big article. It was like about 30 pages, and it went through sort of like that whole schematic, where I learned that through trial and error and through experience was, okay, if you go to a casino and you're going to go play poker, when do you think the best times to play poker are? And I learned that because I used to go to the casino like on the weekends, and I would spend the whole weekend at the casino playing poker. I'd make good money. Some weekends I would break even. Other weekends I'd make a few $1,000s. But it covered my university, covered some expenses, things of that nature until I started working full time. And then you can't go during the middle of the week, because the middle of the week is all the retired people. They're all grinding. They're all just very tight with their money. They're there for a social aspect, but they're not going to give away their money.
I see. On
the weekend, you have, the bachelor parties, the bachelorette parties, the drunk people. In Niagara Falls, where it's, I'm right by Niagara Falls. That's our closest casino. There was a nightclub there in Niagara Falls in the casino. At 2 a.m., everyone came out. All these young guys were stumbling out, ready to play poker drunk. You didn't get that on Monday, Tuesday, Wednesday, Thursday. You got that Friday, Saturday. So then you start to figure out the optimal times to do things. And then you carry that over to trading. Suddenly trading, your job was to figure out the most optimal times to make money, get in and get out. And that's what I learned, and that's what I started to apply, because everyone says, well, swing trading is the way to do it, because you're risking the smallest amount, you have the biggest risk to reward, you can do really well. And I don't discount that, but I looked at it, it's like swing trading to me is the equivalent of playing a poker tournament. Right? I play the World Series every year. I go to the World Series. It's religion for me. I enjoy it. I enjoy seeing my friends. I enjoy like the whole atmosphere, walking into Las Vegas, into the Amazon room at Rio, and seeing thousands of poker tables. It's crazy to watch. Like if you've ever been to Las Vegas, you'll see it's like the mecca of poker. And it was always fun for me because it's like, man, all these people are here to try and win that one prize, right? And in tournaments, the top 10 or 15% get paid. So then I used to sit back and be like, wait a second. I'm going to sit in this tournament for 3 days on the chances of winning a big amount when, it would be nice to have, but I don't think my skill set is there to win. I'm going to need some luck. And then I have to hope that my luck holds out for those 3 days. Whereas I could sit at a cash game, buy in for an amount that I'm comfortable with, get up at any time, and still have the rest of my day to do whatever I wanted to do, right? So there was two sides of the coin. Now going back to trading, it was the same idea. People ask me like, well, why do you only scalp? Well, I said, well, I can catch identical opportunities every day in the market pretty much on the smaller time frames. I'm in and out of the market for, maybe in an hour or two, and then I have the rest of the day to myself. I don't swing the trade, but the trend will continue, and the next day I will turn around and take it again. But I don't have to worry about what if it reverses? What if there's a massive news spike? What if there's, because everything's always changing in the market, and then I get stopped out. And I was deep in profit, and then Donald Trump said something stupid, and now the market reversed and stopped me out. It's like, no, I'm already out of the market. Tomorrow I can come in and do the exact same trade again because he's pushed the market up to go back down again. So there was always this battle, and it's still to this day, of scalpers versus swing traders. It's more of just a preference. I just enjoyed the fact that I could leave the game anytime I wanted, and the money was mine. I didn't have to worry about leaving my money on the table. Similar to a poker tournament, I didn't have to come back the next day and still fight with the chip stack. It's like, yeah, the last prize, if you play like a $1,500 tournament, last place you get like in the money, you get like $1,500 or $2,000. You basically get your money back plus a little bit more.
Yep.
Over 3 days of playing. I could turn around and take that $500 or that $1,500 and make 6,000 or 7,000 in 3 days playing, and that's just as good as finishing 20th or 25th in the tournament. But I did it on my own time. So that's how I started to correlate the way I was trading, and that's really where my trading career sort of blends with what I was doing previously, or what my interests were. I applied those same ideas to when I was trading.
So you're honestly one of the best people to have or to ask about this, the scalp versus swing debate, and I really want to ask you more about this. I have some more specific questions later on, because you have a really unique perspective, and it seems to work for you. And you have some really cool analogies that I hope that you bring up a little bit later. Now, talk to me about this. I know that you're in the poker world a lot, and some poker players, like Phil Hellmuth, for example, they'll say that some things are genetic, some things are not genetic. You can read people, you can't read people. How much of trading or how much of performance is genetic to you, and how much of it would you say is acquired skill? Let's take trading, for example.
Yeah, okay, so let's start with trading. So the biggest things that you probably hear in your trading or when you talk to other traders is, how do I get confidence, right? So that's the first thing. So that's a measure of performance, right? If I'm confident in what I do, I don't have any performance issues, right? Because if I execute a trade, I'm confident that we're going to win. That's what you can say. That's the first thing. The next thing comes from, I always say, the experience of executing, right? So I have a little slogan that I use. I sort of coined this, is confidence equals experience plus education, right? And basically those three variables can be swapped or interchanged in that equation. So you can move that equation around. You can say education plus confidence equals experience. You could say education equals confidence plus experience. You could say, education or experience equals confidence plus education. You can switch all those variables around. There's always a point when it comes to performance that there's a gap missing. There's something missing in your performance. That's the reason why you're not confident in your trades. You don't know how much the risk. You don't know where to set your take profit because you don't have the education behind you. So when we talk about high performance athletes or high performance traders, it's you have built a set of rules, you have built a set of experiences, and you're repeating those over and over and over again. And once again, you can't get mistaken with the fact that not the same idea isn't going to present itself every single time. It's similar to a pro athlete where you run a set play, but if they call an audible, you have to have enough confidence to make that decision at that time. And that's where all the greatest athletes or the greatest traders are, because you can set a risk to reward of a 1 to 3 or 1 to 5 or whatever you want. But when the markets start moving against you, you have to be able to be confident in the sense of like, hey, I'm going to exit, and I have to be comfortable with that exit, and I have to understand that that was part of my pre-planning. So when I look at high performance traders, we have multiple scenarios in our head. Like I go OCD when it comes to scenario-based trading, because I'm always looking at all the possible things my opponent, and my opponent being the market, what can they throw at me? I'm always aware that, right now we're in turbulent times, as an example. So anyone can make a statement about the economy and it could rock the markets.
Yep.
We can have some big company announce a bunch of layoffs. We could have, influx of this coronavirus, like more deaths. Like there's always those things. So having that in the back of my mind, that's part of my playbook. And as you become more experienced as a trader, your playbook grows so that, you're like, all right, I've seen this before. They're going to move the market this way on anticipation of this. And as you get better with anticipating what your opponent's going to do, you now can start exploiting those opportunities. And that's where the performance comes from. That's where if you want to argue the innate versus non-innate traits of a good high-performing person, it's not necessarily, they can run faster or jump higher naturally. It's they know their genetic makeup and they're using it to the best of their advantage, right?
Wow.
So if you're super tall, you're going to play basketball. Doesn't mean you're going to be good at basketball, but you already have the genetic makeup to actually do something. Now you have to apply those ideas. So when people look at trading, and I always say this, it's like usually people that are problem solvers naturally, or they have a decent education, they understand not that they're smarter than everybody else, but they understood what they had to do to achieve those specific ideas or those goals. And that's where when you look at younger people and you look at young traders, they're lost. Because really, when you're young, you haven't really achieved that much in your life. Like, you've gone to school, you've done this, you've done that. But when you start looking at your overall achievements, what have you really put work or focus in to build that foundation, or to understand, hey, this is going to be a monumental task for me to do it? Because a lot of people have stopped doing things before they've even started. I mean, just look at working out, right? If you and I go to the gym every day, we can work out every day. We won't see much of a change because we're going to McDonald's 3 times a day. So we're negating that workout. But if we go and we do everything, we follow instruction, we're going to get to a better composition of ourselves. You're not going to be able to compare your genetic makeup to me, but we will both have achieved a higher level of our own personal development. Okay. And that's your key. When you're looking at high performance, it's not necessarily a comparison between one trader and another trader. It's like, are you working at your optimal? And what do you need to get to that point to work at your optimal? Like, what are the gaps? And once you start filling in those gaps, that's where your curve starts to accelerate. And that's where you really start taking off as a trader.
Very, very, very well said. Okay, so on the topic of high performance traders, I guess this leads to a really good question that I have, which is, what do you think makes up the difference? So we just talked a little bit about differences between genetic and between educated. But what's the difference between an amateur, an average trader, a good trader, and an exceptional, like a great trader? What would you say is the difference between those 4 different trading classes?
Yeah, okay. So basically, you're looking at, like, I would say, a hierarchy there. Yep. And I think it comes down, first thing comes down to experience. That's the biggest key factor. If I always look at, and I've used this analogy before, I trade a caveman style of trading. I don't use indicators. I don't read reports. I don't look at all this other stuff. I sort of look at the charts, and I look at them from a very basic standpoint of, like, are we in a very, very high region? Or are we in a very, very low region? And it's like, if we're in a low region, does that make sense for an economy? If we're in a high region, does that make sense for an economy? And then I start adding pieces of the puzzle. Because, I mean, trading is like building a house. You start with your foundation, and then you start framing, and then when you get inside the house, now you want your 75-inch flat screen, you want, surround sound, you want in-wall speakers. You start adding those little things. But you still need a foundation. You still need a frame. You still need to build the house so that it weathers the storm. So when we go from a amateur trader to, like, the exceptional trader, like, we go up those bars, that's where the tools start coming in and your playbook starts to grow as you gain more experience. The issue becomes, and this is the challenge part, is how do you go from amateur to exceptional? Amateur traders want to hit home runs every single day. They want to hit home runs every single day to prove their worthiness of being an exceptional trader, where that is not the goal of an exceptional trader. An exceptional trader, your goal is to make correct decisions. That's the number one focus of an exceptional trader, is to make correct decisions. Similar to when you see a high-performing poker player, they make correct decisions, I would say 95 to 99% of the time. And it doesn't mean that they're always winning. See that, and that's the other aspect of an exceptional trader compared to an average amateur or an average trader. Yep. Correct decisions doesn't mean that you're always winning. It means that you're making a decision that will not impact your overall outcome in the long term, right? So as an example, as a trader, what's the first thing we do is we always know how much we're willing to lose. Knowing how much you're willing to lose first before you even look at executing allows you to then properly plan your approach. Well, this trade is going to could possibly cost me too much. I don't like that trade. But if you ask an amateur trader, if they went through that, the first thing they turn around and they say, well, I have a 1 to 3 risk to reward. It's like, okay, so what does that mean? Well, it means that, for every $1 I risk, I can make 3. I'm okay, great. So you have the risk to reward down. How are you applying that? Well, I'm going to take a trade from this area over here and I'm going to exit over here. And then you look at the chart, it makes absolutely no sense. So you may have had the right risk to reward, but your process, your execution was incorrect. So therefore you made the wrong decision. So now you've lost a trade that if you had waited another, say, 3 hours or waited another day, you would have won that trade. That's the difference between an amateur trader and an exceptional trader. The exceptional trader understands already they have a proper risk to reward, but it's the application of that risk to reward and the application within the charts or within the actual environment that allows you to do that. Similar to a poker player. You look at a poker player, they're going to make a decision and they're not going to make it in what we call a vacuum. And what I mean by that is a results-based idea. So, as a trader, people are like, oh, you lost a trade today. Okay, yeah, I lost a trade. Okay. But if I did that trade 100 times, I would probably win that trade about 70% or 80% of the time. So am I worried about the outcome? I'm not worried about the outcome because I made the right decision over the long term. And that is also another idea that an amateur trader has to understand, that when they build out their plan or they build out their strategy or how they're going to execute, you need a sample size. You can't switch your strategy every 2 or 3 weeks because you had a losing week. You need a sample size of 3, 4, 5 months to realize that, hey, Mondays and Fridays, those are the days that suck for me. I'm not trading there. Like an exceptional trader, I can give you my whole playbook and you'll be, holy cow, like how did you go through all this? It's because through all my statistics and all my gathering, it's like, yeah, Mondays were no good for me. Fridays were no good for me. The first week of the month is usually pretty crappy. You have NFP and things of that nature. The last week of the month is deadly because you have the month closing, the week closing, you have Friday closing, you have like 3 ending candles. And then it's like when you look at it, it's like the middle of the month is usually the best part of trading because it's like all the trends are making sense. You have your monthly candle trending, you have your daily candles trending, your weekly candles trending, and now you can move to your smaller time frames. But if you don't, as an amateur trader, put those sample sizes together and do those statistics and the back end work, you never get to an exceptional trader. You have to put in those little bits and nuggets to get to that point where it's like, man, how did Ted understand that we were going to go up to this level? Like, how did he pick out that level? It's like, well, it was easy. I mean, I've seen this happen like 1,000 times. Oh, okay, yeah, makes sense. But does it really make sense? Or are you just saying that just to agree? Like, that's where you start to see. And as you level up as a trader, that's where you know that you start understanding the information that you're processing, but now you're asking questions about why you got to that result. And it's like levels of poker thinking, right? So, we compare this to poker. Level 1 thinking is like, okay, both of us play. I have a pair of 5s, you have a pair of 6s. Well, you win because you have a better pair than I do. But level 2 is like, I know that you have a pair of 6s, so I'm going to try and represent a pair of 7s. And then level 3 is like, okay, he knows I have a pair of 6s, so I'm going to represent a pair of 10s, knowing that he's going to try and represent a pair of 9s, right? And you keep leveling yourself, and that's the same thing in the markets. It's like, okay, I know that the New York session is probably most likely going to be a continuation of the London session. Okay, but if I know that, everybody else knows that. So now I have to wait for everybody to play their hand, and then I jump in the market because I want to see what they're going to do. And is it actually going to happen the way I think it's going to happen? And if not, how do I adjust to that point?
Right.
Where it's not like I'm just saying this always has to happen at this point. There's going to be a variation of that, but how do I adapt to that variation?
Right. Fire. All right. I really appreciate that. There was a lot of heat in there. If you had to put that, so just to recap, you had a hierarchy of things that were important for a trader. you said experience was at the top. Would you put discipline next and then education? It would kind of be experience, discipline,
Yeah,
education.
yeah. I think either one works. You can interchange education and discipline. I think if you look through history, as you become smarter as an individual, you start becoming a little bit more risk adverse. You start making more correct decisions. That's just by default, right? When you're a child, you don't know that the stove is hot, right? You just know the stove cooks food. But as you get older, you start to realize the reason why the stove is cooking my food is because it has to heat it. The heat makes the stove hot. The stove can hurt me if I touch it.
Right.
Right. So that's where, you can change education and discipline in there, because, education gives you discipline, but, discipline can also give you education, right? If you go walk on the highway, chances are you're going to get hit by a car. You didn't need to be educated by that. You just need to be disciplined to realize that, hey, I shouldn't walk in front of a moving car. I'm going to get hit. Right. So you have that little bit of interchangeability there. And I mean, some people call that common sense. So, I mean, there's a little bit of a balance there. But yeah, I think you hit it on the head where, you have those tiers of information. And as you exploit those tiers of information in those categories, it just makes you a better trader. But the bigger question is, are you able to stay the course as a trader? When the going gets tough, are you really wanting to trade? Like, what is the desire level? I think that's another area too that comes into discipline is, what are your reasoning? What's your reason for trading? Are you trading because you actually enjoy the process? You enjoy finance, you enjoy global economy, you enjoy economics, you enjoy watching the news? Or are you looking to make that next rent payment? Or are you looking to buy those fancy shoes or that fast car? So there's a balance there too, right?
Right. So I want to keep things a little light. Ted, give us your craziest Forex story. What's the craziest story that you have in Forex?
Okay, so this was actually pretty good. I think the best one was, there's been a few lately, but this is the one that sticks out the most. So IC Markets was leaving Canada. This was back in, I would say, 2017. They were getting ready to kick all Canadian clients out. So they were saying by the end of the year, like, you're out. And I was trading in IC Markets for, a few years, and I did really well there. And we were on the, I think it was the Twitch, we were trading live on the Twitch stream. I think it was just like a group of us working together, and Rakil had just finished trading, and it was like 9:30 in the morning. I still remember it was in September 2017. The Canadian interest rates were coming out, and Rakil was like, it comes out at 10, and I was like, I already made money today, but it was my account was, or I had already like basically emptied my IC Markets account already, and I was just playing with, like, I think it was like $50,000 to $100,000. I was still just, I just had money left over that I was seeing if I could run it up. Like, I was being very aggressive. I was sort of being reckless because I'm like, I'm not going to be trading here more, most likely. And also at the same time, at that point, I was sort of starting to build. I was starting to build my own brokerage at that point. Like, I had literally, I was in the final stages of signing agreements in September, October of 2017, getting ready to launch in January. So I already knew sort of my playbook at that point. And he's like, okay, we're play the interest rate. So I was like, okay. So we knew that the rates were going to increase because US had just increased their rates 6 months prior. And from an economic policy standpoint, Canada usually follows the US, usually 6 to 8 month intervals. So we knew that. And both Rakil and I live in Canada. So like, we knew what was going on. The economy was booming, everything's good. And so we both took market orders, like at about 9:55 or 9:50 around there. And I still remember that. And I had made money earlier because we had traded earlier together. And then I said, okay, I'm just going to take the money that I won and I'm going to just add it to this day. Like, I don't care what happens to it. And so 10 o'clock rolls around, interest rates come out. Yeah, they raised the rate. So we knew that. MT4 basically freezes on me. So I'm like, what the hell happens? And then it loads up, and then, we were over, I think, 400 pips in profit at that point. and I had my 2 positions running. It was my biggest single day gain ever. It was like close to 7 figures. And it was hilarious because I was sitting there like hitting my close button because I couldn't realize I didn't realize how far the market had dropped. Like literally the market fell off a cliff for the USD CAD because the Canadian currency had gained so much value compared to the US dollar because interest rates had increased, basically generating, stimulus for the economy, everything like that. And it was crazy. And we were screaming and yelling because he had done the same thing. And it was just one of those things where, when you look at that and, people turn around and they'll say, oh, you guys get so emotional. I mean, it's not necessarily the aspect of the, the win on the trade or the amount that you won, but it's the feeling that everything that you work for as a trader, all the information that you've gathered over the months, all the pain that you've done in terms of marking up charts, understanding what's going on technically and fundamentally, it plays out to a T, and you're like, yeah, I just crushed the markets. Like it's such a good feeling, and that's I think where you look at emotions as traders. It's not the emotion of winning the money or winning the trade, but it's the emotion of like, I worked so hard for all this to execute and to get to where I got to. And it's the feeling of gratitude, and it's a feeling of just accomplishment. That's where I think, if you watch our, live streams with Raquel, people get emotional, and it's not because they're winning, but it's just like, man, we hit it on the head. Like we nailed that. Yep. And I think that any high performing athlete, that's the pinnacle of what they want to do. It's not the winning. It's the fact that you worked so hard to get to that point and you achieved that status of, success in that point. And it, everything else follows behind. It's not like, oh, I won so much this, or I made so much of this. It's not. I crushed the market. Every single day I go in there, I'm beating the hardest market in the world, and I'm coming out of there unscathed. And that's the feeling of satisfaction. That's where you get the emotional high of, I did the correct things today, whether it's I managed my risk, I didn't take a trade today, I managed my loss, I was disciplined. That's the emotional aspect of trading. That's where people should have emotion of, I conquered everything I had to do today. I might not have won the trade, but I didn't blow my account. I didn't move my stop loss. It's like I won. You might have tried to beat me, but I still held to my, I still stuck to my guns at that point.
Yep. No, I definitely feel that's really great insight. Appreciate that. We're going to get back into getting excited from winning in a second. But since you touched on it, let's talk about your brokerage. Talk to me about that, because as I did a little bit more research on you, I actually didn't know that it was yours. And we do have some students over in the ChartAddicts community that actually use that brokerage. And so I want to see how that started, how you went about it. Was it always your plan to open a brokerage? How has that been? What do you see from that side? Just really curious.
Yeah. So it's interesting because everybody seems to know this story except me. When it comes to like, why did I do this? Because people, if you ask 10 people on the street that know that I run a brokerage, they'll turn around and they'll say, well, Ted planned this from day one. And it was like, actually, I didn't. It wasn't anything that I did on purpose. It was more so literally when I started looking into it, because I was trading IC markets. I had no problems with them. Like I would never fault a broker, because it is a business. People are doing what they're doing, but I never had any issues with them. I always enjoyed their customer service, things of that nature. But what I realized as a trader was there was a bit of, I guess, a gap when it came to relationships. As like if you go to, like, say for example, you bring your money to a bank, you want to know who runs that bank. Not that banks are going to run away, not that brokerages are going to run away with your money, but it's just a comfort level where, I'm putting my trust in something that is technically online, right? Like I can't go to that. I can't go to a brokerage office and sit in their office and be like, yeah, so I'd like to do a withdrawal today. Can you cut me a check? Like They're not going to let you do that. No brokerage will ever let you do that. So it was more of like, there's a gap here. And the funny story was when I used to play on PokerStars, I learned that PokerStars was making $2 billion a year in revenue. as just collecting rake, so the middle of the pot. So whenever two people play, there's a percentage of the pot that's taken from the house to maintain the game.
Yep.
And I looked at that and I said, man, brokerages are the exact same thing. And I already had, like, in terms of, we were educating and, we were doing rebates with IC markets where we were giving people discounts. Like, we were taking our rebate and giving it back to, people that were trading IC markets. And I was looking at how much money these guys were making because, you take a look and you're like, how are they able to give you a rebate, right? Like, if you're trading, there's obviously a margin there. And then I started to look, I'm like, wait a second, why can't I build this like PokerStars did? Really care for the trader, try and make, optimal platform, give people a peace of mind when they're depositing, things of that nature. But more importantly, it's like, all these people were complaining that they couldn't run up an account. And then it was like, all these other people were complaining that they didn't have money to invest. And then I thought to myself, I'm like, wouldn't it be good if I could bring traders together with investors and, people could manage their own risk, they do everything. And, I built the brokerage, and built a social media trading sort of thing where, you had investors and master accounts where they would copy trade and they would do all that as well. The investors could manage themselves. And what I really strived for was to create a fair trading condition, because I knew anywhere in money, there's always middlemen, there's always things going on here. So I developed good relationships with LPs, people that I could rely on, things of that nature. As I grew in the business, we actually had a couple of customer service people leave IC Markets and come work for us. It was actually really funny because they actually helped me a lot in terms of how I did my business, because they were saying, hey, these are things that we wanted to change in this organization that they wouldn't listen to. And I was like, oh, that's actually a really good idea. So I started implementing, and I'm the CEO, so I started to do things that I liked. Because I'm like, well, if you get slipped on a crazy, stupid position, the broker shouldn't just say, well, that's just slippage. Like, they should give you an answer. They should be able to give you a log of why that happened. And we do that on my brokerage. We always make sure that we help the client out and educate them, because a lot of clients, they don't know when the rollover is. They don't know when the market closes for a bit. They don't know when it gaps, things of that nature. So, we've done that. But it was more of a personal thing where it's like, and you take heat on both sides now. People are like, hey, Ted runs the brokerage. He's a pretty cool guy. He helps me trade. I'm going to support him. Or, yeah, Ted's doing this to make more money. I hate him, right? And then all the stories come out of, well, Ted is stealing money from people. And I'm like, I don't know how I can steal money from people. If I was stealing money, there would be numerous people that would have already tried to kill me or arrest me. Yeah. And then it's like, well, your brokerage is not regulated. It's offshore, and they're just going to take your money and run. And it's like, there honestly is no benefit to running away from a cash cow. Like, if you are able to, and I've told people this, and the reason why they're like, a lot of people have trashed me lately on the internet has been, there's been a few people that have opened up their own brokerage that I showed them information maybe I shouldn't have, and helped them and sort of guided them, and then they proceeded to trash me, and I'm sort of like, well, why would you do that? Like, there's enough space for everybody, but I really wanted to build a platform that was fair. It's strictly, we have liquidity, we go straight to market, things of that nature. And people ask me, they're like, well, like, how do you make money? Commissions. Last month in March, we had our best month as an organization because of the amount of volatility and volume. I mean, it's great being able to help people, but then also it's good to see that, traders are improving. And my goal as, sort of an influencer, I guess, in terms of that, and now running this platform, is like, hey, if I can help you be as profitable as you can, build a business around helping other people trade, doing whatever, it's going to help me in the end. But I'm not doing it maliciously. I'm not trying to hurt people. You don't need to trade at my brokerage. I don't even promote my brokerage, because really it does itself. Like, we have a lot of big investors, I would say bigger players in there. The retail market, I mean, yeah, you want to deposit, but it's not really for that. I mean, we cater to the retail side, but we've got a lot of people on the back end that, they have a few $1 million in their account, things of that nature. And, we just run a tight little shop, and we want to make sure that people have a fair a fair environment at that point.
Because you're so involved in the brokerage business, I feel like you're also a really good person to ask about this.
Mm-hmm.
What should a retail trader look for? What are the top 3 things that someone should look for in a brokerage? There's a lot of unregulated and regulated brokerages. There's so many differences
I know.
in brokerages. So.
It's crazy because people ask me that all the time, and they'll say, what's the difference between regulated and unregulated? I only want to trade with a regulated brokerage.
Mm-hmm.
And I look at it this way. There are many rules in life, right? You go on the highway and it says the speed limit's 55 miles an hour or 100 kilometers an hour. Take a look and do a survey how many people are driving above the speed limit, right? So now, shouldn't all those people be penalized? So now the debate becomes with regulated versus unregulated. It's like, well, if you're regulated, you have people you have to report to. And it's like, if people actually took a closer look at regulations, regulations are there to prevent people from doing bad things. But if people are not doing bad things, do they really need to be regulated? Like, do I need to pay a regulatory body money every year to prove that I'm doing something correct? It seems to me like it's a cash grab. And don't get me wrong. I mean, probably the government's going to listen to this and be like, okay, well, we're gonna destroy you now. But it's just more the fact that, when you look at it, it's like it creates a box. It creates inflexibility. And lately, if you look at the larger brokerages, they've all built entities offshore now. They've all built unregulated entities. Mm-hmm. Because they realize that traders aren't necessarily caring so much about who is your boss in terms of regulatory environment. They're caring more about the trading experience. And that's what I've told people. And that's like the biggest thing that you as a trader or retail trader should do is trade at a broker that you're comfortable with, that you have a good experience with. Because I mean, there's going to be 100 negative reviews about one brokerage and 100 positive reviews about the same brokerage. So you're going to sit on the internet all day and you're going to scour through and you Google top 10 Forex brokers, right? And then they show these Forex brokers. Then there's websites that are paid for by brokers to slander other brokers. Like, I mean, like my brokerage as an example, every single website has negative reviews of my brokerage. Meanwhile, those same people email me and say, hey, would you like to advertise with us? We'll remove all the negative reviews and we'll give you a glowing review. And I was like, really? That's how you guys play this industry? But they do. I should put those emails on social media and really unleash havoc on the industry because there's players that are taking advantage of both sides. It's like, hey, you want a positive review? You have to pay for it. I'm not paying for that. I'm not going to pay for a positive review and give fake information. You know what? Let the negative review sit out there and let people come to me and ask me, and then I'll give them an honest opinion. Hey, try it out with $50, $100. If you like the trading conditions, you got your withdrawals in a timely manner, you made your deposits, they were easy, then there's nothing wrong, right? And that's the next thing is like, are you able to make deposits? Are you getting withdrawals in a timely manner? And the bigger thing is too, is if you're not comfortable leaving $100 grand, $500 grand, $1 million in a brokerage, do weekly withdrawals. Leave your account balance at 10,000. You can have 100,000, 200,000 ready to trade, quote unquote. Deposit 5,000, deposit 10,000, and play with it like you have 200,000 in that account, and run the account up, do your withdrawals, but you're not exposed to the unknowns, as people call it, of like, oh, if I run my account up to 300,000, is the broker going to take my money? Things of that nature. So that's the other element that you look at, and then finally, I mean, just look around at what other people are doing. And ask people, ask your friends that are working. And that's how we grew as an organization, was word of mouth. It's like, yeah, this brokerage is pretty cool. They had problems in the beginning. We had a lot of problems in the beginning, and I owned up to all those problems. It was a headache. I think March 2018, we went through what I considered hell on earth. I think I slept maybe 5 hours that entire month. Because everything was breaking. We were refunding people money like it was going out of style. Like, I looked at how much money we lost that month, refunding, crediting, explaining our poor trading conditions. Like, it was a disaster. But, everybody stuck with it because they're like, hey, these guys owned up to it. And I told people, I'm like, give me a year. Give me a year to prove myself and I'll show you. And a lot of our big traders, they stayed with us. And they're like, okay, Ted, we'll give you a year. And now we're 2.5 years into it. There's people there with monumental accounts. I'm like, I check all the withdrawals at the end of the day, anything over 100,000, and people are withdrawing all the time. But that's the biggest thing that you have to do as a person, is really work with your people and your friends and see what works, and diversify. Don't just use one platform, use 2 or 3. Like, be smart with your money. You don't have to stick to one. If you want to stick to one, that's fine. But don't turn around and think that you have to. You're not obligated. I tell people all the time, people message me about other brokerages. I don't comment on other brokerages because it's really a conflict of interest. But I always tell people, I'm like, do what you're comfortable with. Trade who you're comfortable with. I'll still help you. I'll still answer your questions. It's not going to change my view that, oh, you're not using my platform. Like, that's ridiculous. Like, that's the dumbest thing I've ever heard. But it gives you more of a sense of transparency, where it's like, hey, when the time is right, and if you want to try our platform out, come try it. Like, it's not a big deal. Deposit $50. If you like it, deposit more. If you don't, hey, see you later. It's not a big deal. Like, the brokerage industry is continually evolving. There's thousands of brokers out there. It's really focus on ones that you get good customer service, good deposit withdrawal options, and that other people around you use it. Because at least then somebody else has used the brokerage, and it's not somebody that's written a stupid review that they were paid by another platform to write. Like, I mean, some of the reviews that I see about my brokerage are hilarious. Like, there's people that have basically made up stories, and I'm like, how can anyone believe that this is accurate? Like, this makes absolutely no sense. Like, in 2.5 years, now all of a sudden this is coming out, and it's like, oh yeah, because there's another brokerage starting up and they're looking to trash me to get clients. And it's like, okay.
Yep. No, I've seen that before. You see reviews of a broker that you normally use, and you don't experience any of those problems on a regular basis. But let's bring this back home to the trader at home. Ted, I want to talk about some common misconceptions that people hold about the markets. And I want you to kind of talk about this from both sides. So what's the common misconception that you see your trading students have? And what's a common misconception that you see people have about the back end stuff? So you're now a little bit more connected with the brokerage side, the liquidity providers. You might have some connections with them.
Yeah.
Are there any myths or misconceptions that you commonly see? Stop hunts, stuff like that. If you want to just go in, please.
Okay. So let's clear up some things from the brokerage side first. I'll give some people some insight into the brokerage side. Okay. So the first thing first is MetaQuotes is a company that took advantage of the brokerage industry. So when people talk about getting slipped, and they talk about, their trades not finishing, or, stop losses and stuff like that, MetaQuotes created that sort of infrastructure. And what a lot of people don't realize is every broker uses an iteration of MetaQuotes, because that's your MetaTrader terminal. So now every broker from a retail side experiences, the same sort of thing. And what ends up happening is that you find that, the slippage happens or your terminal freezes. That has nothing to do with the brokerage. Like, as an example, on our back end, we have an aggregator that pulls liquidity from multiple sources, and it gives you the best price. That price is basically pushed through to your MetaQuotes terminal. So if you think of an aggregator is like your router. So like, say for example, like right now everyone's playing Call of Duty. Call of Duty is attached to your Xbox. So your Xbox is MetaTrader. Your router is your internet connection, your modem, and that feed goes into your Xbox. So when people turn around, they're like, "Oh man, I'm lagging. Like, it's not working." It's not the, Call of Duty server. It's your internet provider that could be lagging. So in this case, maybe your Xbox is lagging. So a lot of people don't realize that, and I caution people a lot of times too when you're trading on your phone, because you're using a mobile app to control MetaQuotes, and it's very scary, because if you lose Wi-Fi or you lose an internet connection for a second, you could not have closed the trade. Your trade could have gapped. You could have entered in a crappy position. So the biggest thing, and this is another thing for brokers, is if you want to know if a broker's legitimate, I guess, quote unquote, is ask for a fixed API. A fixed API will allow you to bypass MetaQuotes and go directly into their aggregator, which goes directly into their feed for liquidity. And that means they have to give you the prices, from an actual provider, because a lot of people, you've heard people can manipulate MetaQuotes or MetaTrader. That's how you avoid that. You avoid that manipulation altogether by building a custom terminal. You can build your own setup and having that API feed go directly into the liquidity. So a lot of, say, our big clients, as an example, they run algorithms. they run directly through API feeds. They don't use meta quotes at all. So that's the thing from a retail standpoint that a lot of retail traders don't understand. They don't understand the correlation between MetaTrader and brokerages. So that's the first thing. The second thing is the daisy chain for food when it comes to liquidity and when it comes to making money is so long. It's hilarious. When I learned about this, I just about poked my eyes out because I'm like, the retail trader is getting gouged so huge when it comes to commissions, their spreads, everything, because each person is a middleman. So at the retail level, you're getting the shittiest liquidity. Excuse my language. You're getting the worst. You're getting the worst spreads. You're getting the worst data feeds because it's the bottom of the barrel. And the reason why this is the case is because as a liquidity provider, you provide flow. So we receive liquidity from several liquidity providers, and they provide you a flow. But the problem is in the industry as a whole, what Forex is used for, Forex is used as a hedge for other instruments. So money is constantly shifting. Banks don't actively trade Forex like a retail trader would. Like banks don't turn around and say, okay, today we're buying like 500,000 contracts of USD JPY. They're making executions based on hedging other financial instruments. Like they'll say, okay, our real estate portfolio in the UK, it looks like it's going down, so we need to hedge that with another currency. We have to do that. So that's where you see the volume shifts. It's the same thing like safe havens. When the equity markets are doing bad, everyone shifts to the safe havens, but there's always a hedge there. So when you work at a retail level from a liquidity standpoint, you are getting the worst of that liquidity because the retail trader isn't hedging anything. We're just trading. We're just executing. So as an LP, when they have to find a counterparty, they have to give it to anybody, and anybody will look and say, well, where are you getting this flow from? Where are you getting these trades from? And they're like, well, from the retail side. And they're like, oh, well, this could be anything. This guy could be scalping for 5 minutes. This guy could be swing trading. Okay, well, we're just going to give you this price, right? So when you look at that, that's the reason why execution is so poor at a retail level. Now, when you go to an institutional level, you actually know who your counterparties are. You don't know who actually takes the trade, but you know if we have 6 counterparties, one of those 6 counterparties are going to execute on that price. Because what ends up happening is when you build what they call an ISDA, you build an agreement with a counterparty, you have to disclose your strategy. Not in the sense that they're going to try and beat your strategy or take advantage of your strategy, but what they're going to do is they're going to say, okay, how do we offload this risk? How do we manage your risk? Because we want to take your flow because obviously you're going to generate and make us money. How do we offset that? And this is the price that you will pay for you to trade directly with us because we understand your strategy. And this is how much it's going to cost for us to mitigate the risk of holding these trades, of shifting these positions, of managing that risk. So that's the biggest difference when it comes to understanding how flow works from a brokerage level. And from a retail trading standpoint, that's the reason why retail traders get screwed the most. Because we are the bottom, we are the bargain basement of liquidity. We just do anything we want. People are scalping, swing trading. And that's the other reason why you can't do high frequency trading on brokerages. Because it's toxic deal flow, because there's the liquidity provider can't offload that risk. But go into an institutional platform, go on an institutional level, you can do high frequency trading all day. Like you can do whatever the hell you want. But obviously there's rules, there's restrictions, there's minimums that you have to meet, things of that nature, right? So I think those are the biggest misconceptions in terms of that. And then obviously the final ones like stop hunts, that there's no one like on my platform. There's nobody sitting like the Wizard of Oz behind the big screen, like checking everybody's positions. Like right now, the market's moving. I'm talking to you. I don't even know what's happening on my platform. I couldn't even tell you. Right? There's nobody there behind the scenes. Right? People always say that there's possibilities, and of course, you read on the internet. There's people that have done that. But ask yourself this: if a broker continues to hurt their clients, are their clients going to stay there? Like that's the biggest thing, right? Like you go to a mechanic and you get your car fixed and your car breaks down 3 times in a week. Are you going to keep going to that mechanic?
No shot.
No shot, right? So like that's what I don't understand with people. It's like, well, this broker does this. It's like, well, if you know they do that, why are you still trading there? Like it doesn't make any sense to me. You just sort of leave that platform, right? Like you move to another institution or another platform. But then there's also instances where there's things out of a brokerage's control, and that separates, and that's an instance where, you know, depending on how your broker is set up in terms of what they value, like I value my clients. So if I see that there's been things that have been unfair, you know, clients will email and they'll bark, and then it gets escalated to me from my customer service. And it's funny because, you know, there's people that I know that will email my broker and they'll yell at my customer service. And it's like, I know that person personally. And it's like, then I respond, I'm like, can you not talk to my customer service that way? Like, we'll fix the issue. Like, just take it easy. But they think that I don't see the email. And I've always told my service team to escalate those kind of emails because I don't appreciate, you know, if you're front line, they only know so much. They only have so much power to do certain things. Sure. Send it to me and let me handle it, and I'll make the judgment call. Because there's been instances where, there was huge slippage, and I'm like, fuck, that was pretty bad. Like I didn't even realize that happened. And you know, we've credited people back, and we've said, hey, you know what? We'll eat that cost. I'll give it back because this client's been loyal for 2 years. I'm not going to lose a client because they got slipped huge on a position. And you know, if it costs us like 5 or 10,000, and you know they're trading huge volumes, of course I'm going to give it back to them. It's just good business. It's just good business.
That's a great way to run a business.
Yeah, and, you know, and don't get me wrong. Like, you know, after this podcast, I'm going to get a flood of emails. Oh, I got this. No, we evaluate each situation individually. Like, you know, it's not a blanket. Oh, we'll just give everything back. But there's been a few instances where people have been slipped huge, and we've looked at that and I've said, hey, this is not fair. I've called the LP. I've talked to the LP, and usually what happens is we'll have a discussion with the liquidity provider, and we'll come up with a solution because we are their customer. So, and at the beginning, when I opened my platform, I didn't have much leverage because I'm a new kid on the block and they don't care about you. But now I've been around the block. I call them up and I'll be like, hey guys, what happened here? Oh yeah, we already know. Don't worry, we're fixing it. You know, blah blah blah. Like there was a huge liquidity pull with gold 2 weeks ago or 3 weeks ago because there was a massive move. Liquidity left the market and there was a huge spike down. Our LP right away, he called me up. He's like, we're already on it, Ted. We already know. You trade gold all the time. We know exactly what happened. We're canceling out orders. We're changing everything for you. We got you. And it was like people didn't even notice that there was anything that happened. But that's the kind of relationship, because I built that with them to say, listen, if you want my volume, you want these clients happy, you got to make sure that we're doing things correctly, because there's no point of trying to chase $1 billion incorrectly when we can make $10 billion doing it the right way. You know? So,
all right, Ted, I really appreciate you sharing that back end stuff. Really helpful information. I do want to run into some of these fire round questions. Normally, we ask these questions to all of our guests, and we just want to hear the different perspectives because we know that there's not one right way to do things. So these fire round questions, these are just quick and easy. Let's talk about stop losses, fundamentals, withdrawals, and then trading alone versus trading with a community. So let's start with stop losses first. What do you think? How do stop losses play into your trading strategy? Do you use them? Do you not use them?
Stop losses more for me are preservation of capital. I want to place stop losses in to make sure that if the market suddenly shifts in a direction that I wasn't expecting, I don't lose my account. But never should I be using a stop loss where I don't understand why my stop loss is there. And I should always be aware of potential areas that my stop loss can get triggered based on multiple time frames. So it's a very key thing to use, but you're not using it to say for risk purposes. You're using it for preservation of capital. And that's where people get confused. They're like, well, I have a stop loss, so this is the most I can lose. But it's like, you're not aiming to hit your stop loss, though. That's the thing, right? You're trying to use it just to make sure that if suddenly the market spikes a different direction, you don't blow your account.
Sure. All right, excellent. Let's go to the second one, which is fundamentals. How much do you look at fundamentals in your daily trading, and what role do they play?
Okay, so fundamentals, that's a big topic that a lot of people talk about. The biggest thing that I can do for fundamentals, and this is the thing that you learn first, is work with a currency pair that you know that country, that you live in that country. As an example, if you live in the UK or you live in Canada, you live in the United States, like work with the base pairs that make up the makeup of where you live. So you understand what's going on in current events, and just be aware, like what are some positive things that will help your currency? What are negative things that will help your currency? And see how that matches up technically. And then afterwards, if you want more information, the idea of Googling free economics courses and learning how interest rates affect pairs, how GDP affects things, like the major news things. And the easiest way to do that is look at a FX calendar where all the news releases are, and Google the main topics of those news releases. GDP, what is GDP? How does GDP affect the currency? How does it affect an economy? And that's basically how you build fundamentals, and you'll be able to keep that in the back of your head. You won't have to memorize things. You'll just know fundamentally what will happen with this news event, or how will this impact things. And then from there you can deep dive and think about things that you really enjoy about fundamentals at that point. Maybe you want to learn more about interest rates, maybe you want to learn about safe havens, things of that nature. But it does play a role, but it's not something where you have to overanalyze or go crazy with. It's just more the fact that as you gain experience, you're going to start asking those questions, and it's going to be a gradual introduction to your learning as well.
All right, awesome. Let's talk real quick about withdrawal strategy. So any quick tips to these new traders about how they should be thinking about their withdrawals, compounding versus income, and different things like that nature?
Yeah, I think the biggest thing is you should pay yourself regularly. And what I mean by that is make sure that you understand how many hours you've put into trading, so that you realize how much you should be taking out. A lot of people make the mistake of saying, okay, I've got a $500 account, and this week I made $50. But what they don't do is they don't equate the total time spent to make that $50. What they'll do is they'll say, well, I executed the London Open, and I was able to make $20 in 5 minutes. I'm a champion trader. But yeah, you are, but at the same time too, did you figure out how many hours you had to prep to get that one execution? Start logging your total hours. Almost be like a truck driver. Like truck drivers log their kilometers or miles, and they log the hours driving. That's part of their pay.
Yep.
Start doing that as you're trading, and you'll start to realize it's like, man, I want to withdraw that $50 because I want to reward myself for the good process or the good habits that I promoted. And I tell people all the time, make Forex real. Even if you withdraw $100, the idea that you made money doing something you enjoy fuels your passion even further, because now it's real. It's like, oh, I got $100. Like, this is great.
Wow, that's really good. Let's talk about trading alone versus trading with a community. So trading can get a little bit boring when you're trading, and it just gets monotonous. And then trading with a community also has its downsides where there's a lot of noise in there. How do you think about that?
So trading in a community is more so to trade so you have like-minded people. You have people that will be able to emphasize, be empathetic to your ups and downs. Try talking to somebody who doesn't trade about trading. They tune you out. So that's where the community aspect comes from. The actual execution aspect, that is where you trade on your own. You should not be following anybody else's execution. You should be working on your own execution. A lot of people can have the same idea, but you should always be executing with your own variables in mind. Use the community for resources. Use the community to bounce ideas off of. Work together in terms of strategizing, figuring things out. But at the end of the day, you're in charge of your money. You need to execute on your own. Trying to follow somebody, trying to copy someone else's ideas, it's going to get you into trouble. Build your own ideas, execute on your own ideas, and go to the community to get feedback on those ideas. Like, use your community as a resource base, as a support group. Don't use it as an execution group, like in terms of, hey, we're all going to take a trade at 8:05 today and click the button. No, that's not what you should be doing. You should be using it as a resource, understanding that you have a lot of people that have a lot of common goals that you have. They've had a lot of common impasses, a lot of things that they've experienced that you haven't experienced yet. Leverage those resources and be gracious when you do leverage them.
Wow. Couldn't have been said better, honestly. Last thing on the fire round. First off, guys, if you're watching this at home, make sure you're going back and re-listening to these answers, because he's dropping so many gems. You're going to have to go back and re-listen a few times to really catch all of this value, but make sure that you're doing that and make sure that you're taking notes at home. Ted, talk to us about one of the biggest questions that we get on a regular basis, which is, they're like, ChartAddicts, how much money do I need to trade? What should I load up my account with? So what would you recommend somebody start off with an account when they're trading? And at what point, at what price level do you feel like the game changes for someone? Is it the 1,000 mark, the 5,000 mark? When does trading start to take on a new feel for a trader? If you can just touch on those.
Yeah, okay. So the biggest thing, that's a question I get all the time, is how much should I start with? The easiest answer is start with something that you're comfortable losing. Yep. And the thing on top of that, and the caveat that you want to add to these amounts that you speak about, is have a backup plan. A lot of people don't realize the pressure it is to make money in general. So whether you start off with $100 account, you start off 1,000 or 5,000, 10,000, there's a pressure associated with making money. When you especially do not have the experience or the skill set yet to make that money consistently. I can compare trading FX to door-to-door sales or to being a car salesperson, right? There's going to be a week where you're going to sell 5 cars and you're going to make a check of like $15,000, $20,000. Same thing in trading. You're going to trade one week and it seems like money's just falling out of the sky. Those opportunities aren't going to always come along. So as much as it is, how much should we start with? It's how you manage those funds and where are you getting those funds? That is the more critical question you have to ask yourself, because what that allows you to do is say, hey, if I'm working part-time, I know my expenses are paid, and instead of me going out to the bar with my buddies this week and spending 50 or 100 bucks, I'm going to put that into my trading account and I'm going to trade. And as I get better with my trading, I'm going to add to my account. I'm not going to deposit 10,000 thinking that I need a bigger account to trade with to win when I don't have the experience. I'm going to add to my account when I get comfortable executing the smaller lot sizes, getting comfortable with my risk, and slowly grow and almost reward yourself for positive work by adding to your account to give yourself a little bit more exposure, to give yourself a little bit more opportunity to win more, and then balance that out with regular withdrawals. So the dollar amount you start with is not necessarily going to impact your trading career. It's the mythology behind why you're starting with that dollar amount. If I only have $500 to my name and I'm putting $400 in my trading account, there's going to be an unbelievable amount of pressure for me to succeed with that $400 knowing that I only have $100 left in my savings. Similar to the fact that if you go to McDonald's and you have $100 in your pocket, you don't mind ordering 2 Big Macs because each Big Mac's $5 and that's $10 total that you're spending, or $7.14. Someone's going to email you and correct my answer. But if you only have 20 bucks and you buy 3 Big Macs and now you have $2 left and you have to try and take the bus home and bus fares $2.30, $2.35, you now can't take the bus home. So it's making logical decisions based on your current financial setting, and then making sure you plan out goals for your financial setting that will always increase and always be beneficial. It's not a matter of liking or not liking your job. It's a matter of understanding that a job at this point is keeping you stable, and it's a means to an end. You're allowed to work at a job, hate your job, but still trade well because at least you're getting an income and you can build your trading account. So when people ask how much should they start with, it's what are your overall goals and where are you getting the money to start with, and is that money continuously flowing, and maybe use a percentage of that continuous flow of money to build your account and let it grow that way. Don't wait to deposit $5,000 and be like, okay, here I go, I'm ready to trade today, and then 2 days later you've blown half your account. Right. It's like, no, put yourself in a position where you are not stressed about making financial decisions on your trading account, and that will make you a better trader overall. Because if you all had $1 million in your trading account, if you lost $10,000 or $15,000 today, you'd bat an eye. You'd be like, hey, that's just, that was me going out to buy a Honda Civic today. Oh, well, I'll get it back tomorrow. But if you only have $15,000 and you blow your account, you're going to feel devastated. You're not going to be thinking right. So
Right.
those are the biggest things that you can do with the different amounts that you're going to trade with, the different size accounts, is map it out to be a percentage of your overall cash flow income, I guess, so to speak.
Right. Ted, this is normally the part of the interview where we start to wrap things up and we ask our final questions, but you are
Yeah.
so interesting. I really want to keep you on the line as long as possible. So
Okay.
I'm going to keep asking you questions. Whenever you want to cut
Yeah.
me off, just let me know. All right, because I want this to run for a little bit longer. So guys,
Okay.
all right, Ted, 100K or six-figure days are now common for you, but there was a time where you had your first six-figure day. Can you explain that little story, and can you explain how that made you feel and kind of how you dealt with that?
Okay, so yeah, so I think I had my first 5-figure day when I was still working full time. I was actually I had just finished trading the New York session, and I was on the subway to work, and I think like 16,000 that day, US, and that was basically my salary times like 4 or 5 at that point for like 5 months or whatever. And like my monthly salary was like I think it was like at that point it was like 4,000 Canadian a month or 4,500 Canadian a month, and I just made 16,000 US in one day. I think what that does for you is it changes your perspective. And when I got to 100, when I got to 6-figure days, and I've gotten almost to 7 figures, now I've tried a couple of times where the market's reversed on me, but it's just more of like your perception of trading changes where, when you're comfortable at those points, it's not necessarily the fact that you made the money. It's the fact that what you've worked so hard for, you've achieved. And it's the achievement of being good at what you're doing. As human beings, you start to realize what you care about more, right? And I think this goes back into social media as well, is people care about validation, right? People care about, being able to, subtly brag to people, right? So when you accomplish your goals or you accomplish what you're doing, it's not necessarily the monetary value, but it's more the idea that, you finally feel that you fit in. And I think that was the biggest thing for me. I remember my first withdrawal. I did a withdrawal at IC Markets, my first 6-figure withdrawal at IC Markets. I ran over to the Porsche dealership that day, and I always tell this story because it is so funny. And I was like, all right, I'm buying myself a Porsche, because that's what you want to do, right? As soon as you get a lump sum of money, you're like, oh man, I can buy all this stuff. Like you're calculating in your head, like I'm buying a TV, buying new shoes, buying jackets, buying watches, buying everything. Like you've spent the money 10 times over. And I was sitting with the sales guy, and we were like putting the car, like we were putting the car together, like we were doing all the colors and everything like that. And then, he told me the price, and, here's, I have to put my deposit down and I'll pay the rest in cash when I pick it up, like, with a check. And I halfway through, I'm like, you know what? I don't want to buy a car. And he's like, okay. I'm like, and I told him the story. I'm like, you know what? I worked so hard for this money, and now I finally have money. Why do I want to put it in something? I already have a car. I don't need this car to validate me anymore. I'm more validated in the fact that now I can go to the shopping mall, or I can even sit here and talk about purchasing something, and I don't even have to worry about it. I can do it if I want, but the opportunity of having choice was more of a win for me. Like I get the biggest joy in the world, or the biggest kicks going to the mall. Like after I finish trading, I'll go to the mall and walk around, and I'll peek into the stores, and I'll be like, oh, that person looks so unhappy. Like it's like Tuesday morning at like 10:30 in the morning, and the mall's empty, and they're just standing there, earning their like $15 or $16 an hour. I'm like, wow, they're so unhappy. Like it's just not fun, right? But that's what trading gives you when you have that kind of freedom and flexibility. And it was things now when I had those 6-figure days. Like I was away in LA, and I had those I had a 6-figure day in LA, and I was sitting there, and I'm like, oh man, it's like I'm going out to dinner later. I'm watching the Laker game, and all those little things that you think about when you have no money, and it's like I want to watch the Laker game. I want to watch Lakers versus Celtics, and I was in Vegas the day before, and literally I'm like, wait a second, I'm just going to take a plane. I'm going to drop myself off, and I'm going to watch the game. And literally, that's what I did. I got into a plane. Like 10 o'clock at Vegas, went to a private airstrip at McLaren, got on a jet, landed in LA at 11:30, got to the hotel at 12, went to the game at 12:30. Like
Wow.
that kind of flexibility and freedom, you sort of joke about and you laugh, and you know, people know me, they're like, that's crazy, like, you know, you did that. But then at the same time too, I mean, the other night I had McDonald's. Like I like having a Big Mac. I like having McNuggets, right? So it's more of the flexibility of choice, and you know, you're like a little kid in a big world now. It's like, you know, I was telling you before, like I had to go get the Porsche. I had to go put my summer tires on, and I was in the dealership, and I was like, wow, look at all these things. Like I want to buy all these things, but it's like, what are you going to do with them? Like, what am I going to do with 8 cars? I'm not going to do anything with 8 cars. Like I'm looking at this GT3 RS, and it's $500,000. I'm like, yeah, but what am I going to do with it? Like, do I want to go to a track? And it's like, oh, that means on the weekends. Like, you have to be passionate about those certain things. So people always ask me, like, well, why don't you have a supercar? It's like, well, first of all, I can't fit in supercars properly to begin with. I'm too tall. I can fit into a Ferrari. But then I'm like, well, my Tesla goes just as fast, right? Like, I'm happy with that. Like, you generate income, you generate, and you become successful to have freedom and freedom of choice. You don't do it so that you can buy things. You do it so that you have freedom of choice. And I think the younger generation, they don't understand that about the freedom of choice. Right. And it's not, you're not validated by what car you drive. You're validated by the fact that you can choose what car you want to drive.
Right.
That's the bigger validation in my eyes. And that's what I learned when I started making 5 and 6 figures. It wasn't how much could I spend and how much I could buy, but look at the choices I have. Like we go to the club in the city. Like I'll go with my buddies and like some of the traders in the city. We'll spend $10,000, $12,000 at the club, and the bottle girl is looking at you like you're going insane. And I'm like, I don't know, just order more bottles. She's like, how many? I'm like, I don't know, whatever you want to bring out. Like there's this flexibility and choice. It's fun. Yeah. I don't go out every weekend, but when we do the best of everything, and that's I think what people need to understand. And you're hanging out with people. Like I've gone to Miami, and I've hung out with traders in Miami, and they're good friends of mine. Like we sat at the best steakhouses. We've ordered everything on the menu because it's fun. It's freedom of choice. And everybody, I look around the table. We had a table of 25 people. Everybody had smiles on their faces. Nobody was worried about how much the bill was going to be. Like it didn't matter. And that's the kind of flexibility and freedom you want. Is you just want to be able to live your life on your own accord, not show off, but just have good people around you and experience life and have that freedom.
Priceless. Absolutely priceless. Ted, we're getting pretty close to wrapping this up. I really appreciate your time, and I really appreciate you for stopping by and dropping so much gems. Seriously.
Yeah, no. Thank you for having me. I mean, it's fun. Like lately, in the last year and a half, people have been asking me to do these. So it's just really, it's interesting because when I hear them afterwards, I'm always like, wow, I sound like I really know what I'm talking about. But yeah, like you as a human, you always second guess yourself, and you're always second nature.
Yep. And that's really why I wanted to get you on, is because you're also very articulate about the way that you go, just the way that you're explaining things. You seem to understand your methods, how they play into your trading, how they play into the longer game. So I really do appreciate you giving that perspective.
No, I appreciate that.
So I know a lot of traders that are successful in the short term, and I also know a lot of traders that are successful in the long term. And I do see a difference in perspective. What would you say is that personality shift between a short-term successful trader and someone who can actually survive and make it in the long term?
I think it's passion. I think the biggest key is passion. You see a lot of people try, and this is one of the tough things for people when they're younger, is they don't really know what they want to do with themselves. They think they want to trade, but 2 or 3 years down the road, they're like, this really wasn't what I wanted to do. Right. So it's a passion where, if you and I sat down, for an example, we had dinner tonight, we could probably sit and talk trading for like 5-6 hours and go hoarse talking about trading, because we both have a passion for it. And I think that's what will separate the longevity for a trader, is if you actually enjoy what you're doing. Because people ask me the whole time, they're like, well, Ted, you cleared X amount of dollars last week. Why are you trading still? Because it's fun. It's fun to be in the community. It's fun to just talk to people. It's fun to watch others grow. Successful people, if you look at all the successful people in the world, they're always wanting to bring up the next person. It's the biggest misconception that people that are successful don't want to help other people. They're the first ones helping, because you realize that it sucks eating dinner by yourself. Like I joke with Raquel sometimes, and it's like, I'm like, finally you're doing like 6-figure months, because like I'm sick and tired of us not being able to go and do stuff. And he's like, yeah, I know. Like he's finally there. So it's like now you have more friends to be around and more people to be around that are successful, but you also watch them grow from, 4 years ago when they were like trying to figure stuff out to where they are now. And that's the biggest high for me is I look and it's like, I made that. That's pretty cool. Like you sort of look back and you laugh. So it's really when you have that kind of passion, you're looking to always see where all the diamonds are in the rough. And don't get me wrong, I've made mistakes and I've tried to help other people that have basically slapped me or stabbed me in the back and things of that nature. But it's just like, when you have a group of like-minded people and they're passionate about it, there is no limits to what they can do.
Wow. Ladies and gentlemen, if you're watching at home, this has been the most eventful, the most insightful interview that we've done on the Expert Trader podcast. I highly recommend you grab a notepad, grab a pen, go back through this podcast and start taking notes. Ted, thank you so much for stopping by the Expert Trader podcast. From us at the ChartAddicts community, we just want to say thank you.
Yeah, definitely. Thank you for having me, and hopefully I didn't talk your ear off.
No, we really appreciate it. All right.